Hey, good morning. Let's go over today's trade plan. So in the overnight session, the buy side has been dominant, but our short-term bias continues to be neutral. As I covered in yesterday's recap video, when you have a disconnect between the market indices, like we do right now, for example, we have a bearish disconnect between the Nasdaq and the S&P, where the short-term bias in Nasdaq is bearish, and that means that even if NQ heads higher, it's going to be running into some areas of resistance where sellers can be active in that market, and that can of course bring some selling pressure into the S&P as well. So when you have this type of disconnect in play, the overall market context becomes more complex, more complicated, and I think it just makes sense to be a little more selective, a little more careful, be more aware of trade location, be willing to skip certain trades that may look okay in real time, but maybe they also have a lot of warning signs attached to them. So that's the environment we're working with right now. So in the overnight session, the buy side has been more dominant, and we could very well head higher as long as we hold above this 2430 high volume node. The problem is that as we head higher, NQ could also run into resistance. Sellers can step into that market, and if at the same time ES is also testing resistance, then sell side can be active in the S&P as well, and that means that even though the market can go higher, it's a risky spot to buy the market here, and the upside could be somewhat limited. And then if we look at the econ calendar, we don't really have a whole lot going on today, and then we have the FOMC announcement due tomorrow. So when we combine all of these factors, we have to be open to the idea that the market may continue the bullishness that we saw in the overnight session, but then taper it with the idea that Nasdaq could run into resistance and the opportunity potential could be fairly low on the upside anyway, given tomorrow's FOMC announcement. So where the market's trading right now, we have to be careful initiating new longs. And then on the upside, if ES gets exhausted into resistance and we're not seeing any major upside momentum or any major broad market strength, then sellers can be active at 36 to 38 and 40 half to 42, and then we have the all-time high at 43 half. And then if you are watching NQ, we have some resistance at 57.60 to 63. Then we have some better resistance at 57.74 to 57.80. And then even stronger resistance at 57.90 to 58.06. So keep those zones in mind for Nasdaq, because if NQ gets exhausted into one of those zones and the S&P is also at resistance, that can be a way that you can perhaps time a short setup in the S&P. On the downside, in the event of a failure at 2430 and a move back down towards the overnight low, we could quite easily go back towards the previous VPOC of 2275. The initial support zone is 1675 to 1875, which marks yesterday's lows. That's a spot where responsive buyers can be active, but we are going to have to assess the situation in real time. If ES is exhausted into it, then there will be a higher probability of buyers stepping in. It doesn't necessarily have to reverse off that zone. It may simply be a reactionary bounce. And then below that, we have Friday's low at 12 half. And then the stronger area of support is at 08 quarter to 11 quarter. That's a fairly high probability zone where responsive buyers can be active, and it also marks a range extreme. Now, the market doesn't necessarily have to go all the way back down to 24.08 quarter, 11 quarter today. It could very well end up being yet another two-sided balance session ahead of tomorrow's FOMC announcement. But in the event that we do start seeing more bearishness coming into the Nasdaq and into the S&P, keep in mind that we could quite easily go down towards initial support. And if we are seeing broad market weakness and big downside momentum, then even the 08 quarter to 11 quarter would not really be out of the question. So that's really the context that we're dealing with. Limited opportunity potential on the upside, or at the very minimum, the upside comes with a higher degree of risk, and for that reason, we are going to exercise caution on taking any long setups at these higher prices. And then if ES is getting exhausted into a resistance zone, and at the same time NQ is also exhausted into its own respective resistance, that can be a short setup on the day time frame. And then overall, I think it just makes sense to play a bit more defense in this market. And if you are a trader that is still working on becoming consistently profitable, then you need to be even more selective in this type of market, because it can go back and forth and we can get abrupt turns in the market. And overall, it is a more complex market structure and market context that we're dealing with. So just bear that in mind. And also remember that it's not going to continue to be this way. We are probably going to get clarity on directionality within the next couple of days. So even if you simply stayed out of the market and waited for the market to provide some more clarity on directional bias, that would be a perfectly prudent thing to do, and especially for newer traders who are still working on learning how to trade the S&P. So those are the main ideas. Let's see how the market responds to the overnight high and 2430 high volume node, and we'll take it from there.